Alright folks, settle in. Your old buddy boss is back, and today, we're talking about something that likely ended up on your toast this morning: avocados. But trust me, this isn't a cooking show. This is a story about a high-stakes game of economic poker being played just south of the border, with a $500 billion pot on the table. And at the center of it all? A scientist, a populist, a real estate mogul, and this little green fruit. Let's get into it. Meet Luis Garcia. Today is October 30th, 2025. Luis runs an avocado orchard on the outskirts of Morelia, Mexico. You could call it the Silicon Valley of avocados. For years, his business, Empake Mexfrut, has been living the dream. He grows the green gold, packs it, and ships it north to the US, where Americans have an insatiable, almost religious devotion to guacamole. A simple, profitable business. But lately, Luis's life has been less about horticulture and more about horoscopes, specifically, trying to divine the political whims of a certain resident of the White House. He's found that the biggest factor affecting his sales isn't the weather in Michoacan, but the political climate in Washington, D.C. He told a reporter, U.S. buyers are always on edge. Every time President Trump, now deep into his second term, even hints at a new tariff on Twitter or whatever his platform of choice is this week, the phones at Luis's company go silent. Sales grind to a halt. His 30 employees look at him nervously, wondering if they'll get a paycheck. It's happened about 6 times already. For Luis, every presidential tweet is a potential tornado tearing through his orchard. And this, my friends, is where our little story about avocados blows up into a massive, nation-defining economic drama. Luis Garcia's orchard isn't just an orchard, it's a microcosm of the entire Mexican economy. A nation of 130 million people, standing at a $500 billion crossroads. 1 year into her presidency, Mexico's first female leader, Claudia Sheinbaum, is walking the most treacherous economic tightrope in the world. On one side, you have the sputtering engine of her own domestic economy. On the other, you have an unpredictable American president who sees trade not as a win-win, but as a zero-sum cage match. And holding the tightrope? Her own populist party, Morena, which now has so much power it can basically rewrite the rules of the game on a whim. The stakes are, well, biblical. Get the formula right, and Mexico could be looking at steady growth of 2.2% a year through 2030. That might not sound like a rocket ship, but it would be the first time in nearly 2 decades that Mexico's economy outpaces the US during a full presidential term. It would mean more jobs, more investment, and a stronger nation. But get it wrong, and the tightrope snaps. We could see 5 years of complete stagnation. Zero growth. A lost half-decade. If she really messes up and spooks the bond markets, it could be even worse. The difference between these two paths, over the next 5 years, is more than $500 billion. Let me put that in terms you can feel. That's about $4,300 for every single man, woman, and child in Mexico. It's the difference between a down payment on a house and a pink slip. So, the $500 billion question is, which path will she take? To figure this out, the nerds over at Bloomberg Economics ran some fascinating models. They basically created a choose-your-own-adventure for the Mexican economy. It all boils down to 2 giant, flashing variables: U.S. trade policy and Mexico's domestic policy. Let's break down the 4 possible futures for Mexico. Scenario 1, the Nearshoring Nirvana. This is the golden path. The jackpot. In this future, President Sheinbaum plays her cards perfectly. She keeps her domestic house in order with pro-market policies that investors love. She fosters innovation, cuts red tape, and makes Mexico the most attractive place on the planet for companies fleeing the US-China Cold War. Simultaneously, she pulls off a diplomatic masterclass with Trump. She convinces him that a strong, stable Mexico is good for America. The tariffs stay low, goods keep flowing, and the USMCA trade deal works as intended. The result? That sweet 2.2% annual growth. Foreign investment doesn't just trickle in, it floods in. Factories that used to be in Shenzhen pop up in Monterrey and Tijuana. Mexico becomes the undisputed workshop of North America. Luis Garcia isn't just selling avocados, he's exporting mangoes and blueberries and can't hire people fast enough. This is the dream. Scenario 2, the walled garden. Now for the nightmare. In this scenario, Trump goes full tariff man. He decides Mexico isn't playing fair and slaps on heavy, punitive tariffs. The border, economically speaking, slams shut. In response, Sheinbaum, feeling the pressure from the populist wing of her party, retreats inward. She says, fine, if the world doesn't want to play with us, we'll play by ourselves. The government expands its control over industry. State-owned enterprises, like the eternally struggling oil giant Pemex, get blank checks. Private investment, both foreign and domestic, evaporates. Why would you build a factory in a country that's in a trade war with its biggest customer and where the government might change the rules on you overnight? The result? Zero growth. Stagnation. The economy flatlines for 5 years. The $500 billion prize vanishes into thin air. Luis Garcia's US market is gone, and the domestic market is too broke to buy his pricier fruits. A generation of opportunity lost. Scenario 3, the self-inflicted wound. This one is perhaps the most tragic. In this timeline, Sheinbaum actually succeeds with Trump. The trade relationship stays strong. The gates to the American market are wide open. The golden goose is ready to lay its eggs. But Sheinbaum fumbles the ball at home. Caving to political pressure from her predecessor's base, she cranks up the spending on populist projects without a clear return on investment. The budget deficit balloons. She pushes through radical reforms that scare the hell out of the bond market. You know, the bond vigilantes we've talked about before. They start demanding higher and higher interest rates to lend Mexico money, until they stop lending at all. The result? A currency crisis. A debt crisis. A complete economic meltdown, even with free access to the US market. It's like being invited to an all-you-can-eat buffet but having your jaw wired shut. This is the path to becoming Argentina. Scenario 4, the treadmill to nowhere. This is the purgatory scenario. Sheinbaum does everything right at home. She's fiscally responsible, courts investors, builds the infrastructure. But it doesn't matter. Trump is implacable. The tariffs come down hard. Mexico is a great place to do business, but its primary customer just boarded up the doors and windows. The economy sputters along, maybe slightly above zero growth, but it's a constant, exhausting struggle. It's economic long COVID. So, you see the tightrope? She has to nail both parts of the equation. One misstep, and the whole thing comes crashing down. Now, you might be thinking, okay, boss, that's a nice theoretical framework. But what's actually happening right now, in October 2025? This is where it gets really interesting. 1 year in, President Sheinbaum, a PhD-trained energy engineer they call the scientist, is proving to be a much more complex character than anyone expected. When she won in a landslide in June 2024, the markets had a full-blown panic attack. Her party, Morena, gained a supermajority. That meant she could push through constitutional changes without any opposition. One of the first things they did was make judges subject to popular election. Think about that. The judicial branch, the supposed check on power, was now controlled by the same political movement as the executive and legislative branches. Investors saw the ghost of Hugo Chavez and ran for the hills. The peso tanked. They were afraid she'd be a carbon copy of her predecessor, the charismatic populist Andrés Manuel López Obrador, or AMLO. AMLO was a fascinating figure. He genuinely lifted millions out of poverty with massive increases in the minimum wage and social spending. But he also had a love affair with big, state-funded projects of questionable economic value, like the Mayan train and a massive new oil refinery for the debt-ridden state oil company, Pemex. We're talking about a company with over $100 billion in debt, yet he kept throwing money at it like it was a brilliant startup. By his final year, Mexico's budget deficit was swelling dangerously. But here's the twist. Sheinbaum, his hand-picked successor, has been different. The rhetoric has been softer. She talks more about partnership with the private sector. And most importantly, she's shown a real commitment to fiscal discipline. While she's still propping up Pemex, planning to give it another $14 billion in 2026 because letting it fail is politically unthinkable, she has slammed the brakes on new megaprojects. She's aiming for an ambitious reduction in the public deficit. And the market, after its initial freakout, is absolutely loving it. Since the post-election panic, foreign capital has come roaring back into Mexico. The S&P/BMVIPC, Mexico's main stock index, has rocketed up over 27% this year. That is its best performance in 16 years. The peso, which investors had dumped, has surged about 13% against the dollar, earning its old nickname, the super peso, back. Government bonds have rallied. In the cold, calculating world of international finance, that's a massive vote of confidence. But her biggest test, of course, has been the Trump dance. And so far, she's been surprisingly deft. Trump came into his second term breathing fire, promising to tear up trade deals. But Sheinbaum has managed him. She's been moderate, sharp, and non-confrontational. Trump has repeatedly granted Mexico a reprieve from the blanket tariffs he's slapped on other countries. Right now, Mexico's effective tariff rate on goods to the US is around 7.6%. That's not great, but compare it to the 40% rate facing Chinese goods. In a world on fire, Mexico is merely getting singed. But here's the shrewdest, or riskiest, move she's made. She's taking a page directly out of the Trump playbook. She has floated plans to slap tariffs as high as 50% on Chinese cars, steel, and textiles coming into Mexico. You see the 4D chess here? On one level, she's protecting Mexico's own fledgling industries. On another, she's sending a clear signal to Washington, hey, we're on the same team. We're helping you fight China. We are your secure, reliable supply chain partner. So don't you dare tariff us. It's a bold gamble. She's leaning into dependence on the US at the very moment when diversification might seem like the safer bet. She's betting the entire farm on Nearshoring Nirvana. To make that bet pay off, she's launched Plan Mexico. The goal is to make Mexico a top 10 world economy by creating dozens of new development hubs. They're extending tax breaks and building infrastructure to lure those companies leaving Asia. The scene on the ground, however, shows the gap between a PowerPoint presentation and reality. Back on the outskirts of Morelia, not far from Luis's avocado farm, local politicians recently held a ceremony for one of these new hubs. They put up a big tent on a vacant lot and gave speeches about its proximity to railroads and ports. A deputy economy minister said, "The world is becoming more protectionist, we have to look to the domestic market." But in the crowd were local residents like Rosalba Mendoza, a 60-year-old chili pepper vendor. She was skeptical. She has 2 sons, both unemployed since they came back from the US after Trump's immigration crackdown. Jobs from a new hub would be a godsend. But as she looked at the empty field, she said, they've been building something there for about 15 years and have never done anything. That one quote is the quiet fear underlying all the optimistic market data. Can the government actually deliver? Can they build the roads, secure the power grid, and provide the security needed for these hubs to thrive? Or will it be another 15 years of empty promises on a vacant lot? The economy itself is sending mixed signals. The unemployment rate is a low 3%. The minimum wage is up 8% in real terms under Sheinbaum. But look closer. Job growth is stalling. Wage growth is losing steam. The economy just barely dodged a technical recession earlier this year. It's like a car with a powerful engine that's sputtering and backfiring. So where does that leave us? And where does it leave our avocado farmer, Luis Garcia? For now, he's cautiously optimistic. He's managed to diversify a bit, sending some fruit to Canada and the EU, though he says it's tough to compete with cheaper Peruvian avocados there. His lifeline is still the US market. He gives Sheinbaum credit. She has proved to be very sharp in her negotiations with Trump, very good, very moderate, he says. It's still too soon to see much of her economic strategy. But the peso has remained stable and tariffs have not increased, which is a good sign. A good sign. That's what the entire Mexican economy is running on right now. Good signs. The promise of a better future. President Sheinbaum is playing the game of her life. She is juggling the nationalist populism of her own party, the transactional protectionism of Donald Trump, the unforgiving logic of the bond market, and the desperate hopes of people like Rosalba Mendoza. She is trying to turn her country into the workshop of North America while making sure the lights stay on and the budget stays balanced. She's walking a tightrope stretched over a canyon, with a $500 billion prize on the other side. One gust of wind from a Trump tweet, one wobble from a domestic policy mistake, and it's a long way down. So, what do you think? Can the scientist solve the equation? Is Mexico on the verge of its biggest economic boom in a generation, or is it teetering on the edge of another lost decade? Let me know your thoughts in the comments below. And as always, don't just follow the money, understand it. I'll see you next time.